Direct indexing is a new trend that's picking up momentum. Let's bring in money man Craig Bolanos. He's the co-founder of VestGen and wealth advisor. This might be a new concept to people. Tell us what you can, Craig.
Well, Angela, I love being referred to as your money man, and I think we need to understand the history. Direct indexing has been, and will continue to be the buzz in all forms of wealth management. And the history is this. In the 1970s, we created the index mutual fund. That was a pioneering concept of investing in a passive index like the S&P 500. And then with technology, we grew into exchange traded funds and a better version of the S&P 500 in 1993. That was the launch of the Spider. And then we finally got to what I refer to as the 2010s. And the 2010s was the next evolution, driven by technology and trading, where we start direct indexing. And direct indexing means you're going to replicate a popular index like the S&P 500 or S&P 1500, but instead of owning a fractional share of a fund, you will own the individual stocks that make up that index. And when you own the individual names directly in a separately managed account, it gives you a whole host of benefits that otherwise weren't available in the two previous iterations.
What are some of the benefits of direct indexing versus an ETF or even buying the S&P index?
Well, Angela, the real benefit is this. If you're an investor who realizes one of your largest obstacles is income taxes, then just like you already outgrew your index mutual fund, it's time for you to permanently outgrow your index exchange traded fund. Because if we use the S&P 500 as an example, Angela, wouldn't you agree that if you own the S&P 500 mutual fund, the S&P 500 ETF, or the 500 individual stocks in the exact weighting that they are in the S&P 500, you're going to have the same performance between all three vehicles. But when you go through the labor of love, that is owning the 500 individual names, you get to do something. You get to do tax loss harvesting. Because Angela, think about 23, 2024, 2025. The S&P's up double digits 2 years back to back, plus double digits this year. Not all the stocks are up. And when you own the individual names, you get to tax loss harvest. That means saving you money on your tax return or booking tax losses into your lost piggy bank that can be eventually unlocked when you sell a business, cash in stock options, sell a passive income property. There's just such a tremendous host of benefits for those who are tax sensitive.
Where can people find you, Craig?
If you want to learn more, you absolutely can. Contact us at getretiredstayretired.com.